Good afternoon, everyone. I can just still see the numbers are growing. So I'm going to give it another minute, 12:32 or 12:33 before we kick off. Okay, so we seem to have reached a steady state of numbers. So good afternoon, everyone, and welcome to today's lunchtime webinar. My name is Aaron Kilboy, and I'm chair of the Society's Finance and Investment Committee, which has organised today's session. I'm going to spend 2 to 3 minutes going through some items of housekeeping, and then I'll briefly introduce Martina, today's speaker, and her topic. So just kicking off with the items of housekeeping, I suppose we have the usual disclaimer that the views expressed here today are those of myself and Martina, not necessarily those of the Society or our employers. And on the following slide, Martina, one for the Society of Actuary members, just to take note of our competency framework wheel, which people will be familiar with. And we're just sort of highlighting the key skills that are being assessed today. The other items of housekeeping, this is obviously it's a webinar, it is being recorded, and after the event, I believe we're going to post it to ActiveView, which will be available for people to watch back. The Q&A session will also be recorded. Please do submit questions. You can submit questions anytime throughout the meeting. There's a Q&A portal in Zoom. You should see it at the bottom of your screen, and you can type your questions as they arise. You can post them anonymously or with your name, whichever suits you better. And I suspect we should, Martina's session, our presentation should be wrapped up around 5 to 1 or 1 o'clock. And we'll spend 5 to 10 minutes going through questions. So there will be absolutely time for some good questions at the end. So please do submit them. And then just a final reminder that once you've registered with your full name through the Society of Actuaries website, the Society has a record of your attendance, and that'll follow through for CPD purposes. So if you need other forms of verification for other organizations, I believe you have to get in touch with the Society. So on to today's topic. We're very pleased to have Martina Westphal of BHP Insurance joining us today. Martina is going to talk about the provision of social housing in Ireland and in particular its unique insurance needs. Martina is the Managing Director of BHP Insurance Brokers and has been in the insurance industry for more than 20 years. In this role, Martina specialises in charity and not-for-profit insurance with a particular focus on social housing and the approved housing bodies. So she works on a day-to-day basis to ensure that these approved housing bodies can get the insurance that they need for their wide-ranging needs at a competitive and affordable price. She has worked quite closely with John Hannon, who is a member of the Finance and Investment Committee. And just a special word of thanks to John, who has done a lot to coordinate today's session. Unfortunately, he can't be with us, but just to note a special word of thanks to him. So while it might not be directly obvious, today's topic is an important one for the actuarial community. I think we're all probably interacting with social housing a little bit more in our work. As an example, I'm an investment advisor, and over the last couple of years, we've increasingly encountered asset managers and investors who want to invest in the social housing opportunity, both to earn returns, but also to have a positive kind of social impact and meet certain ESG requirements. And of course, the non-life actuaries in the room, as Martina will touch on, have a very important job in delivering insurance products that the approved housing bodies and her other clients need to allow them to manage risk effectively. I think one of the key messages that I took up from Martina's presentation is that people don't always understand the unique needs of approved housing bodies and not-for-profits more generally. And in that sense, I certainly am going to learn a lot from Martina and her hands-on experience working in this sector. So with that, Martina, I'll hand over to you and I'll let you get started on today's session.
Okay, thanks, Aaron, and thanks everyone for joining the session today. So I'm going to give you a brief overview of BHP Insurance. We'll look at the social housing in Ireland at a very high level, the role of the Irish Council for Social Housing, what they do, what their mantra is, current funding and investment in the sector, We'll also have a quick look at the government's Housing for All plan. This is their latest plan that they rolled out a couple of years ago. The progress to date, how they've been getting on. And then we'll go into the boring stuff. The insurance requirements for all approved housing bodies, and then some insurance challenges and trends. So starting off with BHP Insurance. So BHP is Ireland's only insurance brokerage providing insurances exclusively to the charity and not-for-profit sector in Ireland. So we don't do any home insurance, we don't do any motor insurance. It's all commercial insurance products, like I said, exclusively for the charity and community sector. We service Republic of Ireland customers only. Before Brexit, we did do Northern Ireland. But our partners in Campion Insurances do service Northern Ireland and also the UK, and across Europe as well. Currently we've over 6,000 customers. We've 20 employees, so relatively small insurance brokerage. We manage an insurance book of 25 million gross written premium moment, which is fairly substantial given the nature of the clients that we deal with. We are the appointed broker for the Irish Council for Social Housing since 2004. So September was actually the 20th anniversary that we've been the appointed broker for the council, and we've gone through numerous tender processes to make sure that we're still in the mix, and delighted to still be the appointed broker for them in 2024. We joined the Global PIB Insurance Group in 2022. And like I said, the representative broker for them in Ireland is Campion Insurances. So just having a look at some of our sample clients that we deal with, some high profile clients. The biggest one there that stands out to me is Fluid Housing. Fluid Housing are currently the largest housing association or approved housing body in Ireland at the moment. We also have all the Simon communities. So we've got Cork Simon Community, Dublin Simon Community, Simon Communities of Ireland. Vision Ireland is also a large client of ours, previously known as NCBI, the National Council for the Blind. We also have 80 Roaches Chernobyl Children's International Project, a small organisation, but really important nonetheless. City of Dublin YMCA. We also have DePaul, which are a large housing association, part of the St. Vincent de Paul, as well as housing. They also have all of the homeless hostels and detox and rehabilitation centres across the country. Focus Ireland, I think everyone's probably familiar with Focus Ireland at this point. Their Shine a Light campaign, their Sleep Out was just a couple of weeks ago. Really important client of ours. We also have Crosscare, which is one of the largest religious organisations. Also have housing association arm to their business. The Peter McVerry Trust, long established housing association. Oakley Housing, which is one of the, they call them the Big Six. So in Ireland, we have the Big Six housing associations. We have Fluid Housing, Oakley Housing, Tua Housing, Respond Housing, the Co-op, and Circle Housing Association. And then finally, we have Tua Housing Association. They're currently the second largest housing association in Ireland, with just over 10,000 units. So just a quick look at the Irish Council for Social Housing. So the Irish Council for Social Housing is the National Representative Federation approved housing bodies, AHBs, in Ireland. They were first established in 1982, which is the same time that actually the Housing Agency and the Housing Finance Agency was established. They first delivered along with the AHB housing in 1990. So as you can see, it took a long time for them to get up and running, and get the AHBs moving to actually deliver housing or units. They currently have over 270 members. Although there are over 500 approved housing bodies in Ireland, a lot of them are dormant. They would have set up in the late 80s, early 90s to maybe deliver a one-off scheme, maybe a one-off housing association, a rural scheme. And after that, they didn't do much. So they really have no need to be members of the Irish Council any longer. So all AHBs are also registered charities, and big entities at that, and they're regulated by the Charities Regulator and the Approved Housing Bodies Regulatory Authority. So their strategic objectives is to support their members and increase the delivery of social and affordable housing, enabling high quality responsive services to AHP tenants and service users. We'll talk about that a little bit more in the presentation, but they don't just provide housing, they provide a full suite of extra ancillary services and activities. They promote strong representation and innovation in the AHP sector and its work, enhancing a regulated and well-governed AHP sector, and also promoting sustainability within the AHP sector. So just a brief look at social housing in Ireland. It's talked about all the time, but I don't think many people actually understand what it is, or who is affected by it, or who even is eligible for social housing in Ireland. So social housing is housing provided by two sources, let's say. The first one is the local authority housing, or like me, if you've grown up, we call them council housing. So the local county councils or an approved housing body to people who are assessed as being unable to afford their housing from their own resources. So again, I think there's kind of this stigma around social housing. People assume that if you're on the social housing list, that you're on the poverty line or you're a really low income family. But just to put it into context, in Ireland today, the average house price is €345,000. That's not Dublin prices, but across the board. And the average wage in Ireland is just over €50,000. So it's really, it's not affordable for everybody to own their own home. And, Irish people definitely want to own their own homes. So the criteria to be on the social housing lists is any one person, it's 40,000 for a single person net. So that's again just over 56,000 euro. So again, you can see that average people like you and me could be on the social housing list because it's not realistic, for the average person to own their own home. So it includes, but not limited to, low-income families, elderly people, people seeking international protection, for refugees, and also the homeless sector as well. So it's not just families that they cater for. They cater for everybody. They also cater for people with disabilities as well, which I haven't mentioned. So to avail of social housing in Ireland, a person or a household must apply through the local authorities where they're means tested. So you can't just go directly to an approved housing body and say, will you put me on your housing list? I would like to get a home. They have to first go through the local authority. The local authorities manage all the house allocations and the housing lists for both the local authority housing and the AHPs. So even though they're separate, they're separate entities in regards of providing housing, they do work together in managing the social housing lists. You do have special circumstances, in particular for the AHPs, and I mentioned it at the start of the presentation, whereby you could have a small rural scheme specifically for the needs of that community, whereby 10 houses were built. There are special circumstances whereby local people, maybe elderly people or people with disabilities, would have those houses rather than taking the allocations off the housing lists. At the end of 2023, there were over 58,000 households on the social housing waiting lists. I do understand at the end of Q2 2024 that those numbers had gone down slightly, but still it's a massive number, 58,000 people on the social housing lists. Over the last decade, the number of households on the social housing waiting list have increased by 18%. So currently in Ireland, at the end of 2023, there was only 140,000 social homes. So that's local authority housing and approving housing bodies. The total housing stock split, so 44% were owned by approved housing bodies, which is just over 60,000 homes or units, and then just under 80,000 were owned by the local authority. So they both provide housing, but what are the main differences, I suppose, between the local authority and the approved housing bodies? Well, the local authority are government-owned and managed housing, like I said, the county councils. The main difference between approved housing bodies and the local authorities is the local authorities still allow their tenants to buy their own homes. This has been set out by, some experts believe that because the residents have bought their own homes, that this led to a housing crisis. I wouldn't say led, but absolutely contributed to the housing crisis because they weren't replenishing the stock. They were letting people buy their own homes, which is a good thing. They're absolutely entitled to do that. But there was no one building houses at the time. Approved housing bodies do not let their tenants buy their homes. They keep them, they keep them on the books. They're their assets. Therefore, there's a constant stream of new properties coming into the market all the time. So approved housing bodies, they're independent, non-profit organisations that provide rented housing for people who cannot afford to buy their own homes, and specialist housing such as people for old or housing for older people and homeless people. We also provide services to the tenants, outreach services, childcare facilities, mental health services, alcohol and drug rehabilitation, and also education facilities as well. So like I said, they're not just a housing provider, they provide all the ancillary supports that go with it as well. So local authorities own 50% of all the social housing stock in Ireland, and in the AHBs own 43% at the moment. AHBs are categorised into 3 tiers. So the big 6 that we spoke about at the start are all tier 3. They're the largest housing associations. So we've got tier 1, so which is anything from 0 to 50 homes, tier 2, medium size, 50 to 300 homes, and then tier 3 being the largest, 300 plus homes. There's about 20 tier 3 housing associations in Ireland today. And actually only tier 3 approved housing bodies can avail of finance from the Housing Finance Agency, which we'll talk about in a little bit. So the government's Housing for All plan. So every few years they introduce a new housing plan, with previous years being, not as successful as it should be. But Housing for All plan is on track at the moment. So the Housing for All plan is a new housing plan for Ireland, government's current housing plan up to 2030. It was launched in 2021, and it's a multi-annual, multi-billion euro plan which will improve Ireland's housing system and deliver more homes for all types of people with different housing needs. So the plan estimates that Ireland needs an average of 10,000 social homes. Now that doesn't include private sector, so just 10,000 social homes each year, and a total of 90,000 new social homes by the end of 2030. So how is the plan doing so far? How is the sector doing so far? So from 21 to 2023 inclusive, so we can see here in 21, the average output is 10,000 units a year, which is good. We can see in 2023 that they've gone above that slightly. And I know for definite at the end of 2024, they will have exceeded the average of 10,000 homes a year. Already on our own books, we can see some of the largest housing associations have already added on 2,500 units each. So we definitely will see that target exceeded by the end of 2024. And then total actual versus target, we can see that they are at 32,000 units compared to a target of 30,000. So far so good. This is definitely the best performing last 5 years in producing housing that we've seen since the 80s, I would say. So funding and investment in the sector. So where does the sector get their funding and their capital to provide social housing? So there are a number of ways that they get the capital. The first one is the government has a number of schemes exclusively available to the AHPs to support the provision of social housing. So there's 4 main schemes under the government. I won't go through them in great detail because they are quite complex, but we've got the CAS scheme, Capital Assistance Scheme, which is basically the government provides 30% capital and the AHPs have to fund the rest. You've got the Capital Loan and Subsidy Scheme, you've got the Capital Advance Leasing Facility, and then the Social Housing Current Expenditure Programme. Like I said, they're very complex in nature, so I won't go into too much detail on them. And then in addition to the scheme, the Department of Housing operates Rental Accommodation Scheme, the RAS scheme, and the Housing Assistance Payment, which is the HAP scheme, and they're aimed at supporting housing needs. HAP scheme, we hear about it all the time on the media. The HAP scheme is basically when the local authorities or the Department of Housing will give funding supports to individuals who are currently on the housing list but don't have a home, to pay their rent basically in private tenancies, so with private landlords. So a single person, an adult on the HOP scheme can get up to €180 per month. And obviously that doubles if they've got children and a partner. There's currently 18,000 private landlords participating in the HOP scheme in Ireland. And though it does have some criticism, like it's definitely needed. Without the HOP scheme, people wouldn't be able to afford to live in private rental accommodation. So it absolutely is essential when we talk about the housing crisis in Ireland. So the government schemes enable the AHBs to source units for the provision of social housing through two different mechanisms. So it's construction or acquisition of units, and then the leasing of units from the private sector. So not only do they do they buy homes, they also build with developers as well. And they lease units from the private sector and manage units on behalf of the private sector as well. So you could have a apartment block which is owned by a private landlord, and they will rent them to the approved housing bodies, and the approved housing bodies will then put people on the housing list into those apartments. In terms of private financing, the biggest financer of social housing in Ireland is definitely the Housing Finance Agency, the HFA, which is the state-owned bank, let's say. Again, they're established in 1982. So they provide loan finance to local authorities, voluntary housing bodies, and higher education institutions for housing and related purposes. They are the largest provider of funding to AHBs for social housing, primarily lending to Tier 3 AHBs. So I had mentioned earlier that there's currently about 20 Tier 3 AHBs in the country, and the Housing Finance Agency primarily loans to just them. Their criteria is very strict. So it is hard to get into them, let's say. The agency mainly sources its finance from two European Union public banks, the European Investment Bank and the Council of Europe Development Bank. So currently, the loan advancements for 2023 were 987 million to all HBs, which is a massive amount of money. That was in 2023 alone. Again, we know for 2024 that's going to exceed that amount. The current loan book at the end of 23 was 7.4 billion euro. And the average loan size from the HFA to the AHBs is 10.8 million. Then we have our domestic lenders, so all the lenders that we're familiar with. AIB is the state's leading provider of funding to AHBs for the provision of social housing, and probably the second largest funder to the sector. In 2022, they launched the 500 million fund to back the development of up to 3,000 social homes. It was a follow-on from their previous 300 million fund, which was fully allocated towards the end of 2021. And the latest fund will run until the end of 2024. We also have Bank of Ireland, which were a little bit later coming into the sector than AIB, but they currently fund 3,200 social homes units in Ireland. And in early 2024, they announced it would increase their funding for social housing from 400 million to 1 billion. Then we move on to the international investors and funds. Sometimes it could be quite controversial talking about these, but they do play a really important role in social housing. So there has been significant investment in social housing from international investors in recent years. These investment firms rent the homes back to the AHBs or local authorities on long-term lease agreements, typically for 25 years. So we have some examples of some recent investments into the sector. The first one is New Beginnings. So New Beginnings secures 50 million funding in social housing. So New Beginnings is actually an Irish company. They're an Irish entity. And they're a debt advisory firm with property investment house Roundshield Partners, which are an international firm. So Roundshield Partners, a 1 billion property investment house, signed a 50 million social housing deal with debt advisory firm New Beginnings. And the properties purchased were let to the local authorities for the use of social housing under a 25-year lease. The next one is LGIM Real Estates. So Legal and General invested 54 million in Clúid Housing to increase the supply of social housing. So they provided 54 million in long-term financing to Clúid Housing, one of Ireland's largest approved housing bodies. The funding enabled delivery of 200 new social homes across Ireland, and it was the first Irish approved housing body to secure a financing agreement of this scale with an international institutional asset manager. Inga Investments to invest 100 million in Dublin social housing. So Inga Investments is actually the parent company to IKEA. They committed 100 million to fund the development of 250 social housing units, and then they leased them back into the Dublin City Council. And then the last one, then Franklin Real Asset Advisors acquires 5 social housing assets in Dublin. So Franklin Real Asset Advisors, on behalf of the Franklin Templeton Social Infrastructure Strategy, and they completed the acquisition of 5 newly built social housing assets comprising of 157 units throughout Dublin. Each of the assets were built to a very high specification, and they were rented back into the social housing sector. So moving on to insurance, which is actually my specialty. So AHPs are not only registered charities and housing providers, but like I said, they do offer a complex range of services other than just housing. So yes, they're housing providers, but they're also housing managers. They provide maintenance contracts to many other AHPs. So some of the larger ones, Fluid Works, for example, you might see some of their vans on the road, and they do maintenance contracts for local authorities, their own works, and then maybe some other AHPs as well. They also provide drug and rehabilitation centres. I think a good example of that would be the Peter McVerry Trust or Focus Ireland. So yes, they provide housing, but it's the supports that go with that that are really important. So you could give someone a house to live in, but if they are in any way vulnerable, they need the supports. So they need their social workers, they may need childcare for their children, they may need educational support. So the AHBs provide all of those things. Not all of them, but most of them. So we have them split into, for ourselves, for insurance purposes, we call them core and non-core. So core housing is just housing and nothing else. So they provide housing, they manage housing, and then non-core is housing plus services and supports. So they're the likes of your Focus Ireland, your Peter McVerry Trust, your Cork Simons, Dublin Simon Community. So because they provide such a range of services, they do need a very comprehensive insurance program. So your typical AHP will require most, if not all, of these covers. So the first one is public liability. The second one is employer's liability, material damage. So your material damage is your property covers, cyber liability, money cover. Money cover, probably people are probably thinking, why would they need money cover? Well, as a registered charity, they do carry out an awful lot of fundraising. So they would have fundraising events, and you do need money cover. So people are still physically on site with, bucket collections or bag packs or whatever it is. So money cover is still a really important cover for AHBs. Directors and officers cover, really, really important. Engineering cover, employment practices cover. Employment practices cover is an interesting one because employment practices will cover off any employment disputes within organizations. So even though these companies are charities, they've got massive payrolls, they've got massive numbers of staff. Typically, you're looking at anything from 200 to 300 staff. And with that comes any kind of HR issues, particularly after the recession post 2008, there was an awful lot of increase in stress-related claims and employment practices claims because funding was cut, and people's jobs were increasingly more pressure, more was expected of them. And with that came the stresses, and we've seen an awful lot of employment practices liability claims. So it's not a new cover, it's been around a long time, but really, really important for the charity sector as a whole, because it's a high stress job. Professional indemnity insurance, we'll talk a little bit about this later. Business interruption, legal expenses, professional indemnity, sorry, I see they have that. No, twice, motor fleet and personal accident and travel. Like I said, it's not the full covers, but that is probably your basic covers that any AHP would need. So looking at the covers in a bit more detail, the first one is public liability insurance. Public liability insurance is the most important cover, especially when you're providing a service to the public. like the approved housing bodies do. So a public liability policy protects the policyholder in respect of claims made by members of the public whereby the policyholder is negligent and legally liable for accidental bodily injury, death, or loss of damage to property occurring during the period of insurance. So it's not just members of the public, it's from this point of view, it's their tenants. It's their tenants taking claims against their landlords, which is the AHPs. So it's going to cover injury to third party or damage to a third party property and the limits of indemnity. So basically the cover that you're going to get on the policy typically starts at 6.5 million and can go right up to 20 million. You're probably thinking that's a lot, but when you see some of the claims that we have coming in, 6.5 million in the high courts over a 10-year span is not going to last long. So the types of public liability incidents that we see. So resident caught their finger in a faulty door. So as owners of the property, they are legally liable for the health and safety of the tenants while they're in the property. So even if we don't think it's their fault, these type of claims come in all the time. So if they slip in their own homes and have a claim or an accident, they're going to send them into their landlords, regardless if they're at fault or not. A shower screen fell on a child. A visitor tripped over an uneven floorboard in a common area. So we would have an awful lot of apartment blocks. And again, the AHPs are responsible for maintaining those areas. So if someone comes in and trips in a common area, the likelihood is it's going to be the responsible of the AHP. And then a child fell off a balcony. Their actual claims that I've gone through, children falling off balconies are actually quite common, scary, but quite common. And you would imagine that those claims, go on for a really lengthy period of time. A child has up until their 18th birthday to make a claim. So they are drawn out and they're very costly. The next important cover obviously is employer's liability. So this protects the policyholder in respect of claims who might be made by their employees, where the policyholder is negligent and legally liable for accidental bodily injury, death suffered by an employee during the course of their employment or as a result of their employment. So if a company has employees, subcontractors, or volunteers, they all need to have EL. Like most insurance policy gives it a standard. It's not actually compulsory in Ireland, but it is in Northern Ireland and the UK. The standard limit of indemnity is 13 million. Doesn't really deviate from that. It's always 13 million on every single insurance policy. And the typical claims that we see coming in from approved housing bodies, back injuries caused by an employee moving some furniture for a tenant. So you could have someone going into a resident and maybe sit down, talk about their rent, or they're talking about any supports that they might need. And if it's an elderly person, they could say, will you help me move that furniture? And of course you could do it. So we see an awful lot of these type of claims, not necessarily from moving furniture, but back injuries, a lot of back injuries in this sector. Another very common type of incident is an assault by a service user. So because the AHPs deal with vulnerable tenants and service users, they would often find themselves in difficult situations. If you could imagine being in a homeless hostel, like a wet hostel, so there's alcohol and alcoholics in the hostels. Sometimes the situations can be very stressful, and we do see a lot of assaults of the employees, and a lot of the time that goes back onto the employer. Maybe they didn't give them the correct training, or maybe they knew, maybe the ratio of employees to service users wasn't correct and they were put in a vulnerable position. So we do see an awful lot of assault cases coming through from the AHPs. Another very, very common one is needle stick injuries. Again, when the employees are working in the homeless hostels or any kind of homeless services mainly, they're dealing with drug users, and there are needles, and a lot of the time they're concealed. So if you think of a scenario whereby a employee maybe on the cleaning staff goes in to clean a room and there's needle sticks stuck in the bed linen or in towels, or even we've had a number of cases whereby people have passed by a service user and the service user have had a needle in their backpack, and it's actually, just by walking past someone, it's sticked into someone else. So really needle stick injuries are very common in the AHPs. And then stress related injury. This ties back to what I was saying earlier about employment practices cover. After the recession, the job roles were, you know, the funding in the sector decreased, and as a result, people's stress levels went up. They were working longer hours, they'd more, their job role increased, and also in times of economic downturn, you see people turn into claims. And really, post 2008, we started to see the claims culture in Ireland. It really took off, and unfortunately, hasn't really gone anywhere. And then the last really important cover, obviously, for AHPs is the material damage. So this is the property damage, the actual physical insurance cover for their bricks, their mortar, their properties. So cover in respect of loss of damage to the insured property arising from any of the undernoted perils. So perils, fire, lightning, explosion, aircraft, earthquake, storm damage, malicious damage, impact by any road vehicle. Impact by any road vehicle is an interesting one because we do have a lot of claims for this. We have an awful lot of housing estates. There is an awful lot of antisocial behaviour. And I would say on average, once a month, we would have a claim whereby a car has driven through the front window or the front door or the front of a house, is in a housing estate. Luckily, we haven't had any serious injuries, but it's significant damage done to the fronts of the property, and also electricity poles. There's fire hazards and everything else that go with that. So impact, strangely enough, is actually a really important cover. And then we've got your standard glass breakage, theft, and accidental damage. So typical claims in the AHP sector, lots of fire claims. Throughout COVID, actually, the number of fire claims increased. And we think it was because there was more people at home, and they were cooking more, they were, charges were in more. So we had an increase in fire claims throughout COVID. And then water damage is your typical, burst pipes, and also flooding, any kind of weather related events. 2009, 2010, we had some severe flooding throughout the country. And following that, a lot of the insurance companies imposed flood restrictions. So that really impacted the sector at the time, because as part of their finance agreements, if they go to the HFA looking for finance, the first thing they're going to ask for is, do you have a full suite of covers? Do you have flood cover? And if the insurance companies are restricting flood cover, or if they're, excluding it outright, a lot of the housing associations weren't able to get finance. So with our insurance partners at the time, Allianz was ours. They were really good. We went out and we did surveys for a lot of buildings that were at pre-construction stage, at planning stage. So if they had a site and it was deemed to be in a flood zone, along with Allianz and their engineers, they came up with a plan to basically reduce the flood risk, and were then able to give them flood cover. And then they were able to get their financing, which was good. So flood damage and flooding in the country is still a significant issue. And like I said, a lot of the insurance companies do impose flood restrictions. The next cover, and the last one that I'm going to talk about, is business interruption cover. So business interruption cover is really important for the housing associations. If you have a property, let's take flood, for example. If you have a property that has flooded, the tenants need to be rehoused. And the only way they're going to be able to do that is if the insurance company will cover the cost of alternative accommodation. So that's what your business interruption cover is. If the business is interrupted, the policy will kick in, and they won't provide housing, but they will pay for the cost of alternative accommodation or loss of rent. So one or the other cover. There's a whole range of other business interruption covers, like loss of income, gross profit and stuff, but increased cost of working, they're not really relevant to the AHPs. And then we've got professional indemnity and directors and officers cover. So professional indemnity is needed by the housing associations because they are providing professional service, not only to their tenants, but like I said, they do provide professional services to other AHPs or to other local authorities. So they might manage tenants on behalf of the local authority. So this protects the policyholder against claims of any actual or alleged negligent breach of duty, act, error, omission, misstatement, misleading statement, or breach of confidentiality in the performance of professional services. So a couple of examples, incorrect advice given in regards to estate management, that could lead to a claim whereby housing association was given advice in regards to how they would set it out or how tenants were being managed. And if someone suffered a loss because of it, a financial loss, the AHP could be sued as a result. And also breach of contract. We've had a couple of these over the years. The AHPs work really closely with contractors, and the competition in the AHP sector is an all-time high. And they're all fighting for contracts with different developers. And we've had a couple of cases whereby the AHPs, an individual in the AHP has promised a contract to a contractor, and then they never pursued it. They went and did a deal with the developer, and because of that, the contractor lost money because they had invested time, they had invested, resources into getting ready for that contract. And as a result, they took a case against the AHP and they were sued. And then directors and officers cover. This is really important. Because they're registered charities, people assume, oh, directors and officers don't have responsibility or they don't have personal responsibility. They absolutely do. They are legally liable personally for anything that could go wrong in regards to their own role in a company. So it protects the individual trustees, the board members, the directors, and the officers for claims and alleged claims of wrongful acts while carrying out their roles and duty within an organisation. So, someone might accuse a director of a wrongful act, and it might be an innocent wrongful act, and doesn't have to be intentional, but they're all going to lead to defending themselves in court. So this policy will protect an individual if they find themselves in a situation where they've been accused of a wrongful act in their role as whatever it might be in the organisation. So we've seen claims against CFO for mismanagement of funds. There's some high profile cases in the media and in the courts at the moment. A senior leader is held responsible, personally account for failure or alleged failure to implement proper controls about data protection and cyber liability. Again, this is kind of a hot topic at the moment, and we'll talk about it a little bit more as we go on. So I'm coming into the final kind of section of the presentation, which is insurance challenges and trends at the moment. So the big thing for the charity sector as a whole and the AHBs, the approved housing bodies, is there's only a limited number of insurance companies that are in the sector. We have three main insurers for social housing, Allianz being the largest provider of social housing insurance in the country. Ecclesiastical, they insure a number of AHPs, and then Irish public bodies. So Irish public bodies is actually the state insurer, and they insure all of the local authority housing. So local authority housing is all insured under the Irish public bodies, the IPB we call them. And then in regards to why there's only three, pre-2008, there were a number of insurers in the market that would have dealt with charities. We would have had Zurich Insurance, RSA Insurance. Zurich were actually the main insurance provider of social housing prior to Allianz. And then we were hit with all of those flood claims in 2009, 2010. And it just wasn't profitable for them anymore. So we've seen an exit of a number of insurance companies come out of the market. And at the moment, like I said, we've only got three. So many of the insurers fail to understand the complex nature of the services offered by AHBs. A lot of the funding requirements by the lenders are quite complex. A lot of the insurance companies don't want to do them. And also they think that they're just providing housing where it's not. It's everything else that goes with that. Like I said, all the services that go with that. And a lot of the insurance companies, they just don't understand at the moment. They just don't understand, the risk behind that. So they choose to stay away. Insurers may also have capacity or reinsurance challenges given the high property sums insured. Now, that wouldn't necessarily be for one AHB on their own. There wouldn't be any issue with capacity or reinsurance. But for ourselves, we insure the entire scheme. So we insure over 200 social housing bodies, and the property reinstatement values is well over 3.5 billion euro. Now, that's not in market value, that's reinstatement value. So you know, sometimes when an insurance company looks at that, they think actually that might cause issues for us. We don't have that capacity at the moment, so they just choose not to write it. So with limited insurer competition, what it does is it drives the premiums up. And I don't want to say that there's a monopoly, but there's definitely, you know, Allianz Ecclesiastical and IPB. Aviva have started to come into the market a little bit very recently, I would say in the last 18 months. If that's going to be long term, I don't know. But we often see insurers come in for a short period of time. They'll do 2 years, 3 years, they'll have some big losses and then they'll just exit immediately. Um, so it's currently a hard insurance market for the social housing. Inflation and underinsurance, specifically for AHBs, inflation and increasing building costs significantly impact the housing sector. The higher the costs, the higher the building sum insured, expanding the premium and affecting the cost of claims. The average cost of claims in the last 10 years has gone, like property cost of claims has gone from €5,000 to €25,000, which is a massive jump in 10 years. And that all has an impact on the premium. You know, the more claims you have, the higher the cost of the claim, your premium is going to go up as a result. Reports state that construction costs have increased by 25% since 2019, and there's no sign of cost leveling off. And then continued price rises can lead to underinsurance, and an AHB is in danger of becoming underinsured during the period of insurance. So the big thing with underinsurance is every policy is subject to average. So if you're underinsured by 20%, let's say you've got a building and it's underinsured by 20% and it's a complete loss. When that claim goes through, it's going to be deducted by 20%, which is not great. So it's really important for all the for all the HPs to make sure that their sums insured are accurate and that they won't be impacted by underinsurance. The next thing is cybercrime. So there's a lot of talk about this between my own clients. Cybercrime in Ireland is at record levels, and research produced by the consultants PwC indicated that just 5% of all cybercrimes are reported to the Gardaí. Cyber policy insurance rates have been increasing in recent years, and as a relatively immature and rapidly growing market, it was poorly understood and initially underpriced and has suffered huge losses from supply chain attacks, ransomware and data privacy regulation. Most recent examples, the HSE hacking, that was a disaster all round. And then the NHS in the UK also had a massive attack a couple of years ago. So it's likely that cyber costs will continue to increase, given the growing threat of cyber attacks. And with the AHBs, there is a real need for cyber liability policies. I think when people think of cyber liability, they're thinking about being online and, you know, ransomware. But it's not just that. You know, when you have housing associations that have in excess of 10,000 tenancies, they've got data on 10,000 households. Their PPS numbers, bank details, health details, you name it, they have it. So if their systems were hacked, like that is a massive data breach. Not only are they liable to the people who own the data, so the tenants and the residents, but they're also liable to the data commissioner as well. So there's massive fines that could be paid out for losing that data or for themselves being hacked. So a cyber liability policy would cover off most of those instances. Macroeconomic factors. So the market and the economic conditions can affect insurance policy rates and business operations for AHBs. Most recently, Brexit, the war in Ukraine, and also COVID-19 pandemic dramatically affected insurance premium rates. So Brexit was a big thing in the insurance industry because we would have dealt with a lot of UK-based organisations, and when they broke away, they weren't registered by the Central Bank of Ireland, and there was a big hurry, a big rush for a lot of these insurance companies to either set up a European branch or to get registered with the Central Bank of Ireland, and it caused a big delay. So what we seen was they had increased costs, you know, and they didn't increase cost in maybe a new office in Ireland or another European base, and all the resources and everything else that went with that. So that increased insurance prices at the time. COVID-19 was an interesting one for the AHBs and also for the charity and community sector as a whole. COVID-19, there was a slowdown in the number of claims actually because everyone was at home. So we didn't see as many public liability claims coming in. We did see a number of property claims. Like I said, there was fire claims, but overall the activity and the services all died down. So there was a reduction in the number of liability claims throughout the whole sector, the AHB sector and the community and charity sector as a whole. And that also had a positive impact for premiums for clients. So start of 2022, ourselves and our partner insurance company had a look at the rates overall, and we were able to pass back savings, liability savings, to a lot of our customers, which was, like I said, it was a positive impact of COVID-19. The Grenfell Tower in London sent the professional indemnity market into absolute chaos. As insurers tried to restrict cover, they increased excesses and some even withdrew from the construction sector completely. And the professional indemnity market hasn't recovered, and cover restrictions and high premiums still dominate the marketplace today. And that is it. I'm not sure how long I've gone on for. I've gone way over, sorry.
No problem, Martina. No problem. You've kept people
I'm gonna
interested anyway. There's
sorry.
people haven't started dropping off, and we've got a few questions in as well. So thank you very much. That was very interesting.
Thanks, Aaron.
In terms of questions, we've had a few feeding through. One is quite interesting, actually. I think it probably relates to the recent documentary people might have seen on RTE about international protection centres and sort of just people maybe hearing about a lot of antisocial behaviour or threatening behaviour towards refugee centres. Is that in any way related to the social housing sector, or is it completely separate?
Yeah, no, it's a good question. It is and it isn't. So a lot of the incidences that we're seeing on the media, the particular locations are owned by private individuals, they're hotels and stuff like that. But there is a cohort in the AHBs that do have a number of refugee centres. So it does impact us, absolutely, and we have seen an increase in antisocial behaviour, let's say, around that. But the thing about the AHBs is they do kind of quietly go under the radar a lot of the time, and that's kind of the way they like to keep it. But yes, it does affect the marketplace, and it's very hard to actually get insurance for a standalone refugee centre. There are markets out there, but premiums are very high, accesses are very high. In general, yes, it does impact AHBs, but the AHBs have been looking after refugees for 40 and 50 years, and no one has known nothing about it. I think obviously, given recent events across the world, there's an increase in refugees, but in general, the AHB sector manages it very well. And like I said, it kind of goes under the radar for them.
And in terms of, you mentioned housing for all, obviously it's build is kind of the government's agenda. Social housing obviously is included in that. Is it fair to say that the demand for insurance from AHBs and social housing bodies is only going to get bigger if this housing gets delivered as it needs to be?
Yeah, absolutely. Like there was only an article in the Business Post this morning. Sean O'Connor from Tua Housing Association has said that they've got record number of units going on stream this year. They said this got 7 billion on their books. The big six have 7 billion on their books at the moment, which is a massive amount. But the downside to that, I suppose, is, and obviously it's great, we absolutely need more homes. There's no doubt about that in the private sector and the social sector. But the downside to that is the AHPs are in competition with each other. They're in competition with each other, and they're in competition with the local authorities. So sometimes there can be, maybe the quality of the housing isn't necessarily what we'd like it to be. If they're desperate for housing, they'll probably take anything. Now, don't get me wrong, they have absolute, standard, and it's of an extremely high standard and specification, the units and the houses that they buy and they build. But sometimes you do see that the quality, takes a backseat, and that in turn increases claims, and it has an impact on the risk and their overall claims experience. So that's the only downside, I would say, that they're fighting a little bit, and the quality might be, second priority rather than first priority.
Yeah, quantity over quality. Yeah, I hear you. In terms of AHBs, I think you might have addressed this, but there's obviously the other element is the local authorities. Do you address their insurance needs, or are they handled separately?
So the local authorities are all insured by the state, which is IPB, Irish Public Bodies, and all their claims are looked after by the State Claims Agency. Now,
Mm,
there is a crossover. So if the local authority has a block of apartments, they might be managed by the approved housing body. So the approved housing bodies might manage the block on behalf of the local authorities. And any claims related to specific liability or injury related claims, 99% of the time, they will go back onto the AHP sector. All property claims will go to IPB and the state, but
mm.
liability claims tend to go back to the AHP. So there is a crossover, but in general, all the local authorities are insured by IPB.
Okay, very good. And interestingly, if maybe get the crystal ball out for this one, but if there was a change in government, such as a Sinn Féin majority, do you see, could that lead to a radical change in social housing policy that could impact on AHB's insurance needs?
Um, yes, absolutely. I seen an article recently. Owen O'Brien from Sinn Féin has issue with all of the AHBs owning their own stock. The local authorities don't own them. Obviously, it's the state, but the AHBs, when their financing is finished, like that's their assets, that's their properties. And Sinn Féin have issue with that. They think that maybe after their long-term lease agreements or after the financing agreements, they can do what they want with those properties. But it's just not true. It's in their constitution that they have to be used for social housing. So there's very strict mechanisms in place to make sure that the houses, the properties are used for social housing, and that any profits from those organisations are actually put back into the
Mm,
AHBs themselves. So yes, absolutely. There are signs from Sinn Féin that housing policy could change, and it would absolutely impact the AHBs.
very good, very good. So that is all of the questions we have. I'm conscious it's coming up to 1:30. I'm getting hungry myself. I'm sure you are too, Martina. Um, in the absence of further questions or comments, oh, we've just had one last one in. At 2 seconds to midnight. So maybe let's take this one, Martina, and then we'll call it a day and grab a bit of
Yeah,
lunch.
sure.
So the person says, it sounds like the claims experience may be poor on this business. For example, the frequency of the impact type property losses was an example that jumps out to me. Who does risk management element sit with? Who does the risk management element sit with?
Yeah. It's not poor, to be honest. We have had times of really bad claims experiences. But it's working with the insurer partner at the time to put through good rate that's going to be consistent, for the next few years. It's not a knee-jerk reaction, business that we're in with the insurance companies. It's consistency all the time. We might charge a higher premium, but it's to, preempt any bad claims that might come down the road. In terms of risk management, all of these housing associations have dedicated risk management departments. They've got health and safety directors, and then they also use outside companies as well with ourselves. So we would work in conjunction with outside consultants, but the majority of them have in-house experts. And then the insurance companies have in-house experts as well. So it's just really a partnership of everyone who's involved. But the risk management is ongoing all the time. So every quarter there would be risk management sessions, seminars, to make sure that everyone is kind of up to speed and up to date on current trends or issues that are arising.
Very good, very good. Okay, well, Martina, again, thank you very much for your time. I thought that was fascinating, and judging by the attendees, and we've had 90% of people hang on till the end of questions, and that's always a good sign. So thank you very much.
Okay, thanks, Aaron. Thank you.
Bye.